Bitcoin just gave traders one of the wildest weeks of 2026. We ran all the way up to nearly $76,000. And then, just like that, we dropped right back into the $68,000 range. Over $400 million in liquidations wiped out leveraged positions almost instantly. And if you thought that was the signal, think again. Because while all of that was happening, Bitcoin was still outperforming stocks, still holding key support around $70,000, and still being accumulated by institutions. So what is this market right now? Is this a healthy reset before the next leg higher? A bull trap fueled by macro uncertainty? Or the moment Bitcoin starts acting like a true global safe haven? Meanwhile, the Fed holds rates steady. ETF flows flip from strong inflows to massive outflows, and Wall Street starts quietly lowering price targets. But here's the twist. Even with all of that pressure, Bitcoin didn't break. So the real question is this market weak or just setting up for something bigger? I'm Sen B'Hiro. Let's break it all down.
You're listening to the Sen B Daily Brief, powered by Whole Shot Coffee.
All right, let's take a look at where the market stands right now, because after a week like that, this setup matters. Bitcoin is currently trading right around the $69,000 to $71,000 range, holding a critical zone after that sharp rejection from the $74,000 to $76,000 highs earlier in the week. And what's important here is this. We're not collapsing. We're consolidating. Price action has tightened up. Volume has cooled off. And Bitcoin is now sitting right on top of a key support structure around $70,000. That level has been tested multiple times, and so far, it's holding. Ethereum is sitting around the $2,050 to $2,100 range, also stabilizing after its recent drop. Not exactly strong momentum, but not breaking down either, which tells us the same story. This is a pause, not a panic. Now let's talk dominance. Bitcoin dominance is sitting around 58%, continuing to trend higher overall. And what that means is simple. Money is still favoring Bitcoin over altcoins, risk appetite is still cautious, and the market is still in a defensive posture. Speaking of sentiment, the Fear and Greed Index has climbed back to around 29 to 32, recovering from extreme fear levels earlier in the month. So we've gone from panic to cautious fear. But we are not back to confidence yet. And this is where things get interesting, because despite the FOMC pressure, the geopolitical tensions, the ETF outflows, the total crypto market cap is still holding around $2.4 trillion to $2.5 trillion. That's not weakness, that's resilience. So the current market structure looks like this. Bitcoin holding $70,000 support. Resistance sitting up near $73,000 to $75,000. Tight consolidation range forming. Sentiment slowly recovering. And volatility cooling down after a major shakeout. Bottom line, the market just went through a leverage flush, and now it's deciding what comes next. Is this a base for the next move higher, or just a pause before another leg down? When we come back, we'll get into the headlines because this week was anything but quiet. Stay with us.
You're listening to the Sen B Daily Brief, powered by Whole Shot Coffee.
All right, welcome back. Bitcoin didn't just move this week. It snapped. We saw Bitcoin push aggressively into the $74,000 to $76,000 range early in the week. And then, just as quickly, it reversed, dropping all the way back into the $68,000 to $71,000 range by the weekend. Now, this wasn't just normal volatility. This was a full-scale leverage wipeout. Over $400 million in liquidations hit the market, and the majority of that, long positions. So what triggered it? It all comes back to the Fed. The Federal Reserve held rates steady at 3.5% to 3.75%. But the real signal came from the dot plot. Fewer cuts than expected, more caution than the market wanted. And that's where things started to unwind. Because at the same time, you've got ongoing geopolitical tension tied to Iran, oil volatility still lingering in the background, and traders sitting in profit after that run-up. That combination? It was enough to pull the rug. Now add in CME futures gaps, ETF flow shifts, and aggressive short-term positioning, and you get exactly what we saw. A fast move up, followed by an even faster reset. But here's the key takeaway. Bitcoin didn't break. It tested that $68,000 zone and then stabilized back near $70,000 to $71,000. So where do we go from here? If Bitcoin can continue to hold above $68,000, we're looking at a potential move right back toward $74,000 to $76,000. But if that level fails, the next real support sits down around $62,000 to $65,000. And with CPI data and macro headlines still ahead, this story, it's not finished. After the break, we're going to talk about something that caught a lot of people off guard. Bitcoin starting to decouple from traditional markets. Stay with us.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
Okay, continuing on. Now, there's a narrative that started gaining serious traction this week. Bitcoin may be starting to decouple. Now, for years, the criticism has been the same. Bitcoin just trades like a tech stock, high-risk asset, moves with the market. But this week, that didn't exactly hold up. While Bitcoin pulled back about 4 to 5% from its highs, the S&P 500 dropped right alongside it. And gold, down roughly 10% since early March. Let that sink in for a second. Bitcoin, the so-called risk asset, held up better than gold. And it wasn't just Bitcoin. We also saw relative strength across major altcoins, Ethereum, Solana, holding structure even as macro pressure built. Now zoom out, and the total crypto market cap stayed in a pretty tight range, roughly $2.46 trillion to $2.65 trillion throughout the week. So what's driving this? It comes down to one word: positioning. You've got ongoing geopolitical tension tied to the Strait of Hormuz, oil volatility shaking traditional markets, rate uncertainty from the Fed. And in the middle of all that, capital is starting to look for alternatives. And for the first time in a while, Bitcoin is being treated less like a speculative trade and more like a store of value under pressure. Now, before we get carried away, this is not full decoupling. Not yet. Because on heavy risk-off days, correlations can snap right back. But if this trend continues, if Bitcoin keeps holding up while traditional markets struggle, that digital gold narrative, it's going to get a lot louder. And with that comes a very different type of investor. After the break, we're going to look at what institutions are actually doing, because ETF Flows told a very different story this week. Stay with us.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at wholeshotcoffee.com.
And we're back. Now, if you really want to understand this market, you don't just watch the price. You watch the flows. And this week, the flows told two completely different stories. Early in the week, we saw strong institutional inflows. Capital was moving in through major spot Bitcoin ETFs. BlackRock, Fidelity, ARK, posting $100 million plus sessions. Momentum was building, confidence was rising, and it looked like institutions were stepping back in. Then the Fed stepped in, and everything changed. Right after the FOMC decision, we saw a sharp reversal, a single-day Bitcoin ETF outflow of roughly $708 million. That's not rotation. That's risk coming off the table. So what happened? Simple. You had pre-FOMC optimism driving positioning, traders front-running potential dovish signals, and then a more cautious tone than expected. And when that hit, institutions didn't panic. But they did reduce exposure. Now here's where it gets interesting, because while ETF flows were pulling back, there's another player that didn't flinch: corporate accumulation. MicroStrategy, continuing its pattern of adding Bitcoin to the balance sheet. No hesitation, no reaction to short-term volatility. That's a completely different mindset. ETF flows? That's fast money. Corporate treasury strategy? That's long-term conviction. So right now, the market is split. You've got short-term institutional money reacting to macro, long-term players continuing to accumulate. And price? It's stuck right in the middle of that tension. So, where does this go next? If Bitcoin stabilizes above $70,000, we could see those inflows return quickly. But if outflows continue, that opens the door to a move back towards $65,000. Either way, ETF flows are going to be one of the biggest signals to watch this week. After the break, we're going to look at what happens when Wall Street starts adjusting expectations, because Citigroup just cut its Bitcoin and Ethereum price targets, and the new numbers are getting a lot of attention. Stay with us.
You're listening to the Sen B Daily Brief, powered by Whole Shot Coffee.
Alrighty, now we shift from what the market is doing to what Wall Street thinks it's going to do. And this week, Citigroup made a move that got a lot of attention. They cut their 12-month Bitcoin price target from $143,000 down to $112,000. And that's just the base case. Their bear case? $58,000 Bitcoin. So what changed? According to Citi, it comes down to three main things: slowing ETF flows, weaker on-chain activity, and stalled regulatory progress in the U.S. Layer that on top of a more cautious Fed, ongoing geopolitical tension, and a market that just went through a major volatility event. And their conclusion is simple: temper expectations. Now, this is important because when a major institution like Citi adjusts targets, it doesn't just stay in a report. It spreads across desks, across funds, across sentiment. And that can start to influence positioning, especially in the short term. But here's the other side of this, because in crypto, these kinds of calls don't always play out the way people expect. Sometimes, when expectations get pulled down, the market does the opposite. So the real question becomes, is this a realistic reset of expectations? Or is this setting up as a contrarian signal? Because for Citi's bear case to play out, Bitcoin would likely need to break below $65,000 and stay there. But if Bitcoin continues to hold structure, if ETF flows stabilize, if macro pressure eases, those higher targets, they come right back into play. So for now, this isn't confirmation. It's a shift in narrative. And in this market, narratives move fast. After the break, we're going to zoom out and look at the bigger picture, because regulatory momentum in the U.S. is quietly building, and that could have long-term implications for everything we're seeing right now. Stay with us.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
Okay, now, while everyone's been focused on price, something much bigger has been developing in the background: regulation. And for the first time in a long time, it's not just enforcement headlines, it's actual progress. Over the past week, we've seen movement on multiple fronts: clearer token classification discussions, advancement of the Clarity Act in Congress, and increased coordination between the SEC and CFTC. Now, that last part is important because historically, those two agencies haven't exactly been aligned. Different definitions, different approaches, different priorities. But now, we're starting to see a push toward harmonization. And that matters because uncertainty has been one of the biggest barriers to institutional capital entering this space. If you don't know the rules, you don't deploy serious money. So what this signals is a shift from a reactionary regulatory environment to a more structured, forward-looking framework. And alongside that, we're also seeing discussion around safe harbor provisions for compliant projects, which means builders may finally have a clearer path to operate without constant regulatory overhang. Now tie that back to the market, and it starts to make more sense. Even with volatility, even with macro pressure, we've still seen strong ETF participation in multiple sessions because long-term players, they're not just watching price, they're watching policy. So where does this go from here? If the Clarity Act continues to advance, if coordination between agencies holds, if definitions become standardized, we could be looking at new financial products, increased institutional inflows, and a much more stable foundation for the next cycle. But if progress stalls or enforcement ramps back up unexpectedly, volatility isn't going anywhere. So this isn't a short-term story. This is infrastructure being built in real time. And when that foundation is in place, the market tends to follow. After the break, it's time for the Proof of Thought Mailbag, where we read your comments, and some of you are about to get roasted. Stay with us.
You're listening to the Sen B Daily Brief, powered by Whole Shot Coffee.
All right, it's time for the Proof of Thought Mailbag, where we read your comments, and some of you absolutely volunteered for this. First up is from @CryptoKing420. Bitcoin is clearly going to $100,000 by next week. It's obvious. Ah, yes, the classic "it's obvious" analysis. No chart, no data, just vibes and confidence. Listen, if Bitcoin hits $100,000 next week, I will personally come back on this show and apologize. But until then, we're going to need slightly more than "trust me, bro." Okay, next one is from @MacroDoomer, and I can tell by the name you're a glass half empty kind of person. Okay, they write, "This is a bull trap. We're going straight to $50,000. Yep, I knew it. So just to clarify, we're either going to $100,000 next week, or collapsing immediately to $50,000. Perfect. The market is now officially a coin flip. All right, next we have at Diamond Hands Dan, and he says, I bought the dip at $75,000. Still holding. You didn't buy the dip. You bought the top of the dip. But hey, if you're still holding, congratulations. You are now an investor. Next one is from at Birch37 and writes, it sounds just like him. Yeah, I've heard that one before. Let me just say this. If you're getting market analysis, macro breakdowns, and volatility coverage, and your main takeaway is, hey, that voice sounds familiar, we might be focusing on the wrong data points. But I appreciate it. I'll take it as a compliment. All right, next one is from at LesAllen-R9C. Why use animated BS? Don't know if anything you said is true or false because your animation makes it all unbelievable. That's fair. Let's break that down. You don't trust the information because of the animation. So the charts, the price levels, the ETF data, the Fed decisions, all of that, questionable because of the avatar. I get it, but here's the deal. You don't have to trust the animation. You don't even have to trust me. Verify the information because whether it's delivered by a face, a voice, or a digital character, the market doesn't care. And last time I checked, Bitcoin still moved from $76,000 to $68,000, animated or not. Hey, last one for today is from at ChartWizard99 and says, everyone is overthinking this. Just follow the trend. That actually might be the most dangerous advice of all, because the moment everyone agrees on the trend is usually when the trend changes. All right, keep the comments coming, because every once in a while, you guys actually say something useful. And the rest of the time, you give us content. After the break, we'll wrap this up with the final thought. Stay with us.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company. Fuel your life.
All right, so after a week like this, what did we actually learn? Bitcoin ran to $76,000, got hit with a $400 million liquidation event, saw ETF Flows Flip, got a price target cut from Wall Street, and still held the line. That's not weakness. That's a market under pressure that didn't break. And right now, that matters more than any headline, because this is where markets get interesting. Not when everything is obvious, but when everything is uncertain. You've got mixed institutional flows, shifting macro signals, geopolitical tension still unresolved, and narratives changing in real time. And sitting right in the middle of all of that is Bitcoin, holding structure, absorbing volatility, and forcing everyone to reassess what it actually is. Is it still a risk asset, or is it slowly becoming something else? Because this last week, it didn't behave the way people expected. And when that starts happening, you pay attention. So heading into the rest of the week, watch the levels, watch the flows, watch the macro, but more importantly, watch the reaction, because the reaction tells you more than the headline ever will. If you got value out of today's breakdown, make sure you're subscribed, following wherever you're watching this, and as always, drop your thoughts in the comments, because the next mailbag is already loading. All right, that's it for today. Stay sharp, stay rational, and we'll see you in the next one. The Sen B Daily Brief is a production of Sen B'Hiro Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, Sen B'Hiro. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the Sen B community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbhiromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.